Hello and welcome to this first video in Lesson 1 of the Introduction to Actuarial Science. Now what we're going to do with all of these first videos is we're going to interview an actuary with significant industry experience and learn a little bit about their career history and also about how what they do relates to what we're doing within this course. And so we thought we'd start by bringing in the big guns. We are very, very lucky to have the president of the Actuaries Institute, Estelle Pearson, here with us for this video. So, Estelle, thank you very much for joining us. Can you start by giving us a little bit of information about what it means to be the president and how that interacts with your regular job?
Okay, well, thanks Adam for asking me to be part of this. What does being president mean? Well, the president of the Actuaries Institute is actually a voluntary part-time role. The Actuaries Institute does have a full-time staff of 20 people with a CEO, but the Actuaries Institute has a council, which is like a board of directors, and their job is to have oversight of the governance of the institute and of the profession. And the president is, in essence, the chairperson of the board. And so to become president, you first of all are elected to council, and that's an election by the members of the profession, and then council elects the president.
Okay, and can you give me a little bit of information about your career history? Why did you decide to become an actuary, and where has that led you?
Okay, well, like a lot of actuaries, I enjoyed mathematics very much when I was at school, and I actually went on and did a maths degree. And then when I was looking for jobs at the end of my degree, I spoke with a number of people, and a number of people suggested looking at the actuarial profession. The thing I really liked about the profession and that drew me to the profession was I really enjoyed problem solving and using numerical mathematical forms to solve what are practical business problems, in fact, and that really drew me towards the profession. So I ended up moving into the general insurance or non-life insurance area about 25 years ago, and that's what I've been specialising in ever since. Currently, as well as being the president, which is my part-time voluntary role, my full-time job is actually as managing director of an actuarial consulting business employing about 100 people, and our clients are general insurance companies, either privately owned or owned by the government.
Okay, and what do you find most interesting about your role?
Look, I have always enjoyed in whatever role I've had in general insurance the variety of problems and questions that we get asked by our various clients, and I think that that's because there's a wide number of insurance products, and each insurance product means that you have to have, specialised knowledge and expertise around that product. So, for example, if you're looking at something like a home insurance product, which is covering a house for damage, it might be from a fire or from a weather event like a storm or a hailstorm or a flood or a bushfire, then it's important that you really have a good understanding of weather and what sort of weather events a particular house might be exposed to depending on its location. So, for example, if a house is near to a river, then it's more likely to be subject to flood. If you're looking at another type of insurance business like workers' compensation, for example, where the insurance is covering payments to injured workers, people who are injured at work, then what you're interested in there is the accident history for different sorts of industries and different sorts of workplaces, and also what impact work safety initiatives might have on those accident rates. So, in each case you have to become an expert in something a little bit different, but it's all insurance.
So it sounds like there's a really wide variety of problems that you need to think about.
Exactly.
Now, knowing what you know now, what do you value most about being an actuary?
Well, the thing that I find in talking with a lot of clients, a lot of very senior people within the insurance industry, is what a fantastic reputation that the actuarial profession has. Companies really value actuarial expertise, and they will go to actuaries, both actuaries who might work in their companies or consulting firms such as mine, because they recognise that actuaries can provide insights and objective advice that's going to add value to their businesses.
So Estelle's been talking about general or non-life insurance. Now, you'll have seen in the prologue videos that we talked about an example relating to life insurance. And that example involved looking at various cash flows that occur at different points in time. So what I'd like to ask you, Estelle, is how are financial processes relevant to your work, and how is the length of time over which these financial processes occur relevant to your work?
Right, okay, that's a good question. So the key financial process in non-life insurance is that insurance companies collect money, premiums, from their customers, and then from those premiums they have to fund payments out or claims to their customers, but they only make those claims and pay those claims if certain events happen. So in the example I used before with home insurance, if somebody's house gets burnt down, then they will pay for the house to be rebuilt. So that's the key financial process. And of course, for an individual customer, the amount of payment that they get back from the insurance company might be many multiples of the premium that they paid. So what the insurance companies are trying to do is to collect enough premiums across all of their customers to be able to fund payments to only a small proportion of those customers. The time value of money is relevant because the insurance companies will be collecting premiums today, but they will be paying claims in the future, and therefore they try to fund those claims from a combination of premiums and investment income on those premiums at the time that the claims are paid. And again, for some types of insurance like home insurance, that gap isn't very long between premiums being collected, maybe an event happening and then a claim being paid. That might be less than 12 months. Whereas for something like workers' compensation, because an injured worker may be off work for the rest of their working life, then the insurance company may be paying claims for the next 20 or 30 years to that injured worker, and therefore in that case the time value of money is much more important.
So what you're saying essentially is that there are differences in gaps between when you receive when the company receives premiums and when they have to pay claims out, and you need to take that into account in the actuarial calculations that you're doing.
Exactly.
Okay, so in a moment, Estelle is going to take us through an introduction to the material for this lesson, which is titled Valuing Cash Flows. And we're going to look at the implications of having cash flows that occur over various points in time and how to value them at different points in time. Now, the material we're going to look at is fairly brief relative to, say, an introductory university course on this topic, but we'll just consider the material we need to know in order to continue on with this course. One other thing that's also worthwhile noting before I pass back to Estelle is that some of you may be very familiar with this material already, and so if you are, I encourage you to go and have a look at the questions first before you review all the videos, because you might find that you're comfortable with doing the questions anyway, and so you may not want to spend the time watching the videos. Of course, if you see a question that you're not familiar with, you can skip back to the relevant video and follow through that way, but I do encourage you to go at whatever pace you feel most comfortable with. Now what I'm going to do is pass over to Estelle, who's going to give us an introduction to the Lesson 1 material on valuing cash flows.